What's up, everybody? Here I am, Dave Bartosiak with Zacks.com, and we are going to do Dave's daily dive into the charts here. So let's just start right off the top with the S&P 500. So here we are, Thursday, March 23rd, and I've got my S&P 500 futures chart up here, which the only reason why I pulled the futures is so you guys can see intraday. But first, we're on the daily, so just a quick capture of what we've seen already. Obviously, the election day move. Here's actually the day of election day. You remember at night we had a huge sell-off and then the stocks rallied. Been rallying since then, stalled out a little bit here at the beginning of March, sort of just shy of the 2400 level, and stocks have come down. Now, the other day on Tuesday had a very sharp sell-off here that you can see on the S&P 500. Let's zoom in on it a little bit. I'll go on the 30-minute chart so we can see a little bit more about what's happening on that. And you'll see sort of just right at the jump, the market started to sell off. They pounded it down all day on Tuesday, retested that bottom during yesterday's trading session. It's rallied up a little bit. Now, the big story, obviously, here is all about that Trump trying to get this healthcare bill passed. Basically, it's telling us whether or not he can actually get everybody on both sides to agree to something, get them together, and get stuff done. Not because America cares so much about this healthcare thing, but what's going to happen to his tax reform plan if he can't get this done. So that's basically the prevailing wisdom on this. So saw a little bit of nervousness as the Freedom Caucus basically said no deal earlier today, so the market started to sell off, and we can zoom in a little bit more just on today's market so you can see what happened there. You got the run up. Here's the open, nice little rally up, and then into the afternoon when it became evident that the Freedom Caucus was not going to make that move. That's when the market came under pressure, started selling off a little bit. Now, this is on the S&P 500, so this is the broad market index. You can get a little bit closer and see really, if you look at the Russell, I'll pull up the Russell here, and you can see how this has been more affected by the potential for this Trump thing to unwind, because this is higher beta here. So again, you see the rally, market's starting to sell off and then really get pushed down towards the end of the day. And again, if we push out towards the daily on the Russell here, you'll be able to see more pronounced that selling that we saw on Tuesday. Here's a very sharp selling off, really established a new sort of bottom end of this consolidation range that the market has been in. Basically, this is December. So it's like we had a huge run up in the month following the election, and then since then, this Russell has been really just chopping around here. Another very interesting play that I've seen has been gold, as gold prices, now these tend to move in the opposite direction of yields, right? So as we were in the opposite direction of bonds, rather, right? So as we start to see yields on the 10-year creep up, it usually puts pressure on gold prices and vice versa. So in an environment here where we're expecting the 10-year to rally and go up, you'd think that gold prices would be coming down. Now, that hasn't been the case. Really, here in the early stages of the Trump trade, you had gold sell off as the 10-year yield went in the logical direction up. But then since then, it's gone the complete opposite direction. So you have a gold trade now that is revitalized, bouncing here off of this 1125 level, and now today getting up to 1250, a little over 1250 before starting to come under a little bit of pressure here. And like I said, that's all basically a direct result of the 10-year, but this has been the much more interesting trade here as of late in terms of the US dollar, because if you look at on the Forex side of things, so if you're looking at the euro here, you don't have that same sort of trend. It's just kind of chopping around, especially throughout this year so far, in this range, sort of 105 up to 109 and change kind of thing. So really from the broad macro view right now, everybody's kind of on this wait and see. Let's see what happens with regards to this new bill coming out of Congress. So can they get it done? So I ran a quick little screener for us, guys. And what I did was I went on to Zacks.com and I tried to find and successfully found, and I'll show you here, 5 stocks that I think we need to take a look at. So these are 5 Zacks Rank #1 stocks that are breaking out to fresh 52-week highs. And I want to take a look at them really very quickly here using our charts. So the first one is Arista Networks, ticker ANET. Now this has been a fantastic story, as you can go back to June when the stock was down at $60, and it's been consistently moving higher. This yellow line that I have here is a 50-day moving average. Down here I like to use something known as the commodity channel index. This is an overbought and oversold indicator. Whenever this is below -100, it's very oversold. Over 100, it's overbought. So typically what I like to do is wait for it to get oversold and then cross over that zero line like you had here. So this was a buy signal back in January when the stock was at 93. Of course, this is probably an earnings report. This has jacked it up since then. You see the huge spike in volume, and this thing is off to the races, ticker ANET. Then you've got Canon, ticker CAJ, that's popped up on the screen also. This one's chopped around a lot. So you see most of last year, 27.5 to 30 was the range here on shares of Canon. And then something funny happened. Instead of chopping back down, it started to find a little bit of support at the 50-day. And as that was happening, if you come down here, you can see that this commodity channel index bounced on the zero line. That's a pattern that I've been using with great success in Momentum Trader, this sort of bounce of the CCI at the zero line. And it broke on through the highs, and for right now at least, it hasn't moved back. One thing I'm a little bit concerned about is this gap up here. So I think I'd be waiting for this to come down a little bit. At least if I could touch the top end, come back to 30, I think I'd be much more comfortable loading up on something like this. But again, this is a Zacks Rank #1 strong buy right now for you to take a look at. The other one is KLA 10 core, ticker KLAC, and a very similar story to the Arista Networks where the thing just keeps on trucking. So we got a triple bottom really here. There's 1, 2, triple bottom near 67 in August 2016. And then it leapfrogged the 50-day moving average in October on heavy volume too, and has continually retreated to this 50-day moving average and found support. So you have support here, and it still continues higher. Right now, the CCI is showing it's a little bit overbought right now at 87.47, and with the 50-day down at 87.60, plus the psychological resistance of 100, maybe you want to wait for this to cool off just a second to get back in it if you're not already in it. Again, Zacks Rank #1 strong by KLA 10 core, ticker KLAC. Now another one here to take a look at is SKM is the ticker. That's SK Telecom. Similar story to Canon where you had this sort of consolidation period where it was chopping around back and forth. 2050 on the downside, up to 23.25 on the upside, chopping around a lot. And you could have used this commodity channel index to basically trade this in a range-bound market. You can do that. Couple of dead giveaways here that it was range bound. First, you look at the 50-day moving average. It's essentially horizontal. That's a clue at a range bound market, so you should be selling these as it comes up, and then buying the dips here also as it tests the bottom end of that range. But what happened here? What was the clue to tell you that now it's for real? Well, the bounce at the zero line on the commodity channel index right near the 50-day moving average is a dead giveaway. In case you missed it the first time, it happened again, another bounce at the zero line. That's a very popular pattern I like to use in my Momentum Trader service. It's been working out great. Now the stock broke out to new highs. Maybe it's a little too hot. You might want to wait for it to come back down at its 23.25 level. That seems like a long way away though. Probably more realistic is just the top end of this gap at the 24.5 range. So that's what you need to look for if you're looking for another entry to Zacks Rank #1 strong buy, SK Telecom. Last stock we're going to show, TAL Education Group, ticker TAL. I know and love this stock very much as it is a part of my home run investor service here at Zacks. And what can you say about this? It just keeps on trucking. kept bouncing at this 50-day moving average several times, had a little dip underneath between, but what happened? Dips below the 50-day moving average, indicating an intermediate term downtrend. The commodity channel index gets oversold, crosses over the zero line, and now we're back off to the races, and it's been marching higher since then, going from 70 all the way up to 103. So here above 100, if you haven't been in the stock, what do you do? Well, what I like to do here is draw a Fibonacci retracement from where we were in the lows of December up here to the recent highs, and you'll see sort of 96 and change is a 23.6% retracement. This $90 level is a 38.2. That's a much healthier level to get in on. And then, of course, the 50% at 85.72. That also coincides with where the 50-day moving average is. I think this will continue to march higher, and so maybe you're better off looking for an entry in the 90s here should the stock start to come down. The commodity channel index does have it as overbought, and it is starting to tick down a little bit. But when stocks are hot like this, and they are Zacks Rank #1 strong buys, sometimes they never come back. So thanks so much for hanging out with me here quickly today on Dave's Daily Dive in the Charts. Be sure to hit me up on Twitter at Bartosiastics and come check out all of the resources we have available on Zacks.com. I will see you guys tomorrow. Thanks.